I'm hearing from a lot of Vaughan families, and I mean a lot. Every single week, they're asking me the same question. Ali, is this the bottom of the market? Should I buy now or should I wait? And look, I get it. You've been watching prices come down, you've been watching the headlines, and you're just trying to figure out if this is the moment you should pull the trigger. So I'm going to give you my honest answer. And that, frankly, is I don't think so. I don't think we're at the bottom yet. I'm going to give you 7 reasons why I don't think we've reached there yet. Not to scare you and not to tell you to freeze and do nothing, but because you should know what's happening on a macro level and how it's impacting the market. The families that I work with make better decisions when they understand what's actually happening, not just what they want to hear. Hello everyone, my name is Ali and welcome back to the channel. I'm a real estate broker here in the city of Vaughan, and every year I help families buy, sell, rent, and move up in this market. I track the trends and I watch what buyers and sellers are actually doing, and I bring that to you as straight, honest advice. If you find it useful, like, subscribe, and pass it along to someone who may need it. And if you're ready to make a move yourself, you can book a call with me directly. It's the first link down in the description. The first reason is supply. There's a significant amount of inventory sitting on the market. When supply is high and demand hasn't fully caught up, sellers don't have the upper hand, and that keeps pressure on prices. In Vaughan right now, we have approximately 1,100 active listings across all property types. New listings jumped by about 37% from February to March alone. I do know that active listings are down compared to last year, and that is a positive sign. However, we're not in a supply-constrained market yet. Condos especially are sitting at over 6 months of inventory, which is a firm buyer's market. Until that inventory gets meaningfully absorbed, prices don't have strong reason to move up. And the second reason is that even after all the corrections that we've seen, prices in many segments are still out of reach for a large portion of buyers. And when a pool of people who can actually afford is smaller than a pool of people trying to sell, well, simply put, the math just doesn't work in the favor of sellers. Think about it. Townhomes in Vaughan are still averaging just over $1 million. Semis are roughly $1,050,000, and detached homes are staggering $1,630,000. These are not normal prices. Even though borrowing costs have come down substantially, the monthly carrying costs on these properties are stretching a lot of families thin. I don't think mortgage rates will come down by much more if they come down at all. So it's up to prices to come down further. Otherwise, affordability is still a barrier for a big chunk of the market. Moving on to the third reason, and this is bigger than real estate, it's the economic uncertainty that we're all living in right now. The tariff situation between Canada and the US is still not resolved, and it's creating real anxiety for businesses, for employment, and for consumer confidence. In addition to that, we have a war waging on in the Middle East. The parties can't come to some sort of a resolution in a peace treaty, and it's impacting us directly at the gas pump. And that's not even the worst part. They transport trailers that are transporting all of our groceries and consumer products, well, they're pumping diesel, and that's far more expensive than the gas that we're pumping. So the down the line cost of everything else that we're consuming is going up as well. And when people are uncertain about their economic future, they don't make big financial commitments. They tend to wait. And this isn't just a headline issue, it's showing up across buyer behavior across the board. The families who were almost ready to pull the trigger 6 months ago are now deciding to sit on their hands. Not because they don't want to move, but because they're not sure what the next 12 months will look like, especially if their job security or income is at risk. That hesitation is unfortunately far too real for some, and it's keeping demand softer than it otherwise may be. Which brings me directly to reason number 4, unemployment and job insecurity. Unemployment has been creeping up across Canada, and more importantly, the fear of job loss is just as powerful as the job loss itself, especially when it comes to real estate decisions. People don't need to actually lose their job to stop buying houses. They just need to be worried about it. And right now, a lot of people are worried. Layoffs across various sectors, the trade wars, and the cost of living pressure are driving consumer uncertainty. It all adds up to a buyer pool that's far more cautious and more conservative than we've seen in years. Until that confidence returns, demand will remain suppressed. And suppressed demand means prices don't recover. Moving on to the fifth reason, which is mortgage renewals. This one is still playing out, and I don't think people fully appreciate how much runway it still has. A massive wave of mortgages that were locked in at those ultra low pandemic rates are coming up for renewal this year and next year. And when families sit down and do the math of what their new payment looks like, well, some of them simply just can't make it work. The numbers are too high. The rates are higher. And what that means practically is that more properties will be coming to market, not because people want to sell, but because they have to sell. And that additional supply, even if it's gradual, keeps the inventory levels elevated and keeps downward pressure on prices. We've already seen power of sale ticking up across the GTA. That trend, unfortunately, is not over just yet. Reason number 6 is something that does get quite a bit of attention, and that's because a lot of people got caught up in the pinch. The pre-construction condo situation. There's a significant number of buyers across the GTA who bought pre-construction condos years ago, and those buildings are now closing. And the problem is a lot of those buyers are closing at a market where the unit is not worth what they purchased it for on paper back in the sales center. Appraisal values are coming lower, and getting a mortgage at today's rates on the purchase price is genuinely difficult. Some of these buyers are walking away, some are being sued, some are taking on a second or third mortgage just so they can close, and then they're trying to sell the moment they close just so they can cut their losses. All of that adds resale inventory to a market that's already dealing with supply pressure, and it's not a Vaughan specific story. It's happening all across the GTA, and it affects the overall market sentiment that every buyer and seller in Vaughan and across the GTA is operating in. And the seventh and final reason, in this video at least, is the immigration slowdown. For years, one of the core arguments for buying investment properties, especially condos, was that rental demand was essentially guaranteed. The population was growing, there was newcomers that needed housing, and vacancy rates were almost non-existent in many areas. That picture has since changed quite substantially. Immigration targets have been pulled back, and rental demand has softened quite noticeably. Rents that were climbing year after year in the past are now flat or declining in certain areas and for various property types. And when the investment case for buying a condo weakens, the whole category for buyers steps back from the market. That's less demand, and less demand means less upward pressure on prices. It's really that straightforward. Now, I do want to be balanced here because the data isn't pointing all in one direction. There are some genuine green shoots in the city of Vaughan. Detached home sales are up almost 33% month over month. Days on market for detached homes has dropped from 34 days down to 26 days on average. Active listings across the board are actually down 14% compared to this time last year. These are real signals, and they are worth keeping an eye on. However, having said that, early positive monthly signals in a market that still has 7 or more macro headwinds working against it, it doesn't mean we've turned the corner. It means that the market is stabilizing in certain pockets, in certain price ranges, and for certain property types. It does not mean that prices are about to start increasing. So, what does all of this actually mean for you if you're a family living in Vaughan thinking of making a move? First, if you're waiting for a clear and obvious "this is the bottom" signal before you make a decision, I want to be straight with you. That signal almost never comes when it feels safe. And this is a very big and. By the time everyone agrees it was the bottom, it's already passed. The families who tend to win in a market like this are the ones who make a decision based on their own situation, not on trying to time the market perfectly. Secondly, if you're upsizing, meaning you're selling a townhouse or a semi-detached property to get into a larger detached home, this market actually has real opportunity for you in it right now. Look, I know you're selling in a softer market, but you're also buying in a softer market. And the spread is actually closer, and it's in your favor because the larger homes have corrected by a larger dollar value than your townhome or your semi has. And right now, with detached inventory being tighter than it was a year ago and competition hasn't fully returned, you have negotiating power on the buy side that may not last through the summer or fall. And third, if you're in a condo and thinking about making that first move up to a townhouse or maybe even a semi, be realistic about where condo prices are. Price it right, present it well, and move with urgency. Waiting for your condo to recover before you sell is a strategy that could cost you more on the other side than you think you'll gain. And finally, don't make this decision based on a YouTube video, including this one. Every family situation is different. Your equity position, your income, your timeline, and your specific neighborhood, they all matter. What I can tell you is the macro picture. If you're a family in Vaughan and you want to have a conversation about making a move, book a call with me. The link is down in the description, and we'll talk about your specific situation to see if it makes sense. Thanks for taking the time to watch us. I hope it gave you a clearer and more honest picture of where things are. If it did, please share it with another family that's asking the same questions, because believe me, there are many others out there just like you. Like and subscribe, and I'll see you in the next video. I'm Ali, and I help Vaughan families make the right move.